What's been the biggest reason for an adjustment? Is it inventory? What generally is the biggest reason that they want to make sure that they button up?
Yeah, two things. One is accruals, particularly maybe for things like a bonus. If if you're closing near year end, you're getting to a time where maybe your employees have earned a bonus but you haven't paid it yet. So that's another thing on timing. It's just certain of those liabilities can be heavily weighted towards one period or another. And then the other item is inventory. If we ultimately come to a spot where the final inventory balance at closing is going to be determined based on a physical inventory, which we would always suggest is the route to go.
Yeah.
As you close a transaction, you should take a physical inventory, particularly for a manufacturing company. It may not be as relevant for a service or other type business, but for a manufacturing company. So any differences that may exist between your records, between your books and what's actually in your warehouse, identifying that really well before you get to that point would be really helpful for everybody. So you can properly adjust the mechanism to compensate for, hey, maybe a difference that's been there for a long time, but you just never true up on your books. Yeah. Which again is hopefully something that comes up during the diligence process. Yeah. And then the last thing that really causes a discussion, we'll put it that way, is has to do with deferred revenue. So anytime you as a business are taking cash from your customers up front and then delivering a product or service at a later time, that can become a difficult thing to deal with in the working capital. Because in reality, when you look at that situation, what you've done is, you've taken a loan from your customer. Yeah. So, as we think about that, ultimately, that's really something that's more often than not thought of as debt, not working capital. It's, rather than take a loan from the bank, you've had your customer pay you up front to finance something that you still have to deliver. So, we've seen it go both ways in the ultimate definition that go into the contracts of the deals we worked on. But it's definitely something to think about in terms of, hey, that cash you've already received, is that something that we call debt in the transaction or something that goes into the calculation of working capital? Yeah.